What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Born and raised in Australia, Vijay Boyapati moved to the United States in 2000 to pursue a PhD in computer science. Instead of enrolling in a doctoral program, Vijay ended up at a small startup called Google, where he spent several years using his background in machine learning to improve the ranking algorithms used in Google News. Vijay left his lucrative job in 2007 to work on a grassroots campaign in the 2008 presidential election, helping to raise millions of dollars and bring hundreds of volunteers to New Hampshire to canvass for Dr. Ron Paul. In 2011, Vijay discovered Bitcoin and went down the proverbial rabbit hole in a quest to understand how a new form of internet money, backed by no commodity and guaranteed by no government, could have any economic value. Armed with a background in Austrian economics, Vijay penned The Bullish Case for Bitcoin as a long-form article in 2017 to provide the layperson with an economic framework with which they could understand Bitcoin. When he began writing The Bullish Case for Bitcoin in 2017, the price of Bitcoin hovered around $1,000, and he hoped the article might help to explain the economic importance of this new form of digital money to a few friends and perhaps even some Wall Street investors. He did not anticipate that the article would be read by close to 1 million people around the world of all walks of life and be translated into 20 different languages by volunteers. Now he has expanded on his seminal piece and authored the new book, The Bullish Case for Bitcoin, available on Kickstarter. Vijay Boyapati, welcome back to the Bitcoin Matrix podcast. How are you?
Thanks, Cedric. It's great to speak to you again.
Yeah, man. We're definitely coming off a ridiculous weekend, and it's great to connect with you. We're just coming out of the Bitcoin 2021 conference. I saw you down there a lot selling the book, and people were just so excited to get a copy, to hear you speak, to meet you. So I'd like to ask you, why did you write the book now?
So I wrote the article throughout 2017 during that bull market, and it was ultimately published in early 2018. I had a job at the time, so it took me quite a while to finish the article. And as you mentioned in the intro, the article was read. It was read by a lot of people. I didn't anticipate that when I wrote the article. I thought maybe it would be read by some of my friends, and if I was lucky, a few people on Wall Street would check it out and be interested in, okay, this kind of makes sense. Now I understand why Bitcoin has value. But it was read by a lot more people. It was read by almost 1 million people around the world, and as you said, translated into 20 languages. So it was a lot more successful than I expected. I wanted it to be an introduction to folks who were curious about Bitcoin but didn't really understand what it was about or why it was valuable. And after I wrote it, a lot of people asked me to turn it into a book. They said this would be great material for a book. And I thought, well, I'm not sure there's much more I want to add to it. It stands on its own as an introduction, and it's not too long. It's a fairly long article, but it's not so long that people are intimidated. They can read it in about an hour. So I sort of held off, and I didn't want to do it. But then when 2020 rolled around, governments around the world kind of just went crazy with this COVID pandemic, and their economic response was to create just massive amounts of money, unprecedented amounts of money. And I felt like in this economic environment, it was a good time to revisit the article and revisit why Bitcoin is so important. And also because in the intervening years, a number of things had happened, a number of new risks had come up, and a number of new misconceptions about Bitcoin. And I realized that there were some important topics that I hadn't covered in the article that I thought were really important, and I wanted to revisit and then ultimately put in the book. So it was partly because the market had changed and matured since I wrote the article, and also because of the circumstance of the pandemic and various government responses around the world to that pandemic, I thought this is a good time to revisit the article. So I spent, a good part of the last half of 2020 and the early part of 2021 revisiting and rewriting and updating and expanding the article, and ultimately turning it into a book, which I released just a few weeks ago.
Yeah, well, I'm super excited. I just also want to bring up that, our first conversation is my most downloaded episode by around 50%. And, your article means so much to me in terms of my journey into Bitcoin. It really distilled a lot of competing signal. I was reading a lot about Bitcoin at that point, but, you're trying to grasp this thing from so many different angles, and, and there's different ways of looking at it. And your article really distilled it for me from like a value proposition, how we got, in terms of monetary phenomena, history of money and sort of sound money. So, and yeah, I think it's the perfect, in terms of that entree, that article was very bite-sized in terms of if it was too long, you could put it down for like in chapter sense. So it was kind of like a book already to me. But it also was the kind of book where you could just jump into it and maybe bang it out. I never got through it in 42 minutes because I took my time, but maybe it took some people 35 and maybe it took an hour and a half, And I'm super excited to get in the new book. I've already bought, 10 copies and a signed copy for myself on Kickstarter. And I'm curious why you chose to go on Kickstarter. I think it's really exciting, but I'd like to hear, how you came to that decision.
Yeah, that's a great question. And thank you for the kind words. It's always really humbling for me to hear people say things like that, and to say, a lot of people told me when I was at the conference signing books for people that it was the thing that orange pilled them or some of their friends. And that makes me feel really good because, I feel like Bitcoin is the most important innovation to money in 1,000 years. And a lot of people have misconceptions about it, but once they're presented with the reasons for why it's important, I find that the vast majority of people get it. They're like, oh yeah, this does make sense. It's not like, some crazy thing that needs, convoluted arguments or anything like that. You don't need to trick people into getting into Bitcoin. You just need to explain it in simple terms, and I think most people get it. So, to get back to your question about Kickstarter, I spoke to a bunch of prominent authors who had written books about Bitcoin, and I said, well, how should I do this? Should I go speak to a publisher? Should I do it myself? And unanimously, every single one of them said self-publish. Do not use a publisher. And I had not expected that. And the reason given was that if you use a publisher, you lose complete control. They essentially control the copyright. They get to tell you when you can do translations. They get to handle distribution. They get to handle marketing. They control everything. And the other thing that's really, interesting that I had no idea about before I started writing a book, I've never done any books before, was that if you use a publisher and you sell a book for $20, you're probably going to make about $1 to $1.50 per book. And I'm not sure if many people realize that, but you make essentially nothing. Yeah. And, you can make money from selling a book, but only if you're an incredibly popular author or you have a huge success and you sell hundreds of thousands or 1 million copies, and then you'll make some money out of it. But what I learned was, for a small new author, you should consider it a big success if you sell 10,000 books. That's a big success. So when you do the math, 10,000 times maybe $1 or $1.50, you make 10 to 15,000 if you're using a publisher. For 6 months or 9 months of work, that's really not worth it. It's like, why would I do that? I mean, there's, some prestige and some glory to having a book, which might be nice, but there's no remuneration. And I thought, that doesn't sound very good either. So I'm going the route of self-publishing. But even if you self-publish and you sell through retail stores or companies like Amazon, they demand a big cut to just even list it in their stores. So if you sell a book for $20 and you self-publish, you do make more, but you're probably only going to make about $5 or $6 per book versus $1, $1.50. So it's definitely much better, but you're not getting that full $20. The thing with Kickstarter, which is really cool, is that you can list your own project and people can pledge to it and say, I would like one of these once you're done. And you get essentially 90 to 95% of the total value of the book. So instead, out of $20, you might get $18 or $19 of that. And the great thing is, how many people have pledged to your Kickstarter before the campaign, the Kickstarter campaign, it's called, before it finishes. And then when it finishes, you have, say, 1 or 2 or 3,000 people who have pledged to it. You can print exactly the right number of books and then distribute it to those people. So it's really a great way of selling directly to an audience and making that big cut. And, I'm not really doing this to get rich or anything, but the reason I would like to make money from this is because I'd like to fund translations. Like I said earlier, I feel like when people hear or read the ideas about why Bitcoin is important, they get it. So I would love to have these ideas presented to as many people around the world as possible, in Spanish, in Italian, in Korean, Japanese, whatever language it is. I would love to have this book translated into every language. And I'd love to do that myself and to get these ideas to people directly and have the control by self-publishing to do that on my schedule, rather than wait a year or two for a publisher to say, yeah, that's fine, you can do it. So for me, the big goal with this Kickstarter is raise enough money that I can then start publishing in other languages. I just want these ideas in as many hands as possible.
Yeah. I've been waiting for the book for a while. I kind of always expected it. It's still, for me, the benchmark in terms of the way I think about how other people present attributes of money or traits of money or history of money. I always go, oh, what did Vijay write? And which attributes did he look at? And what's different? What's the same? What's new here? Is this person on the right page? When the book came out, I was surprised by Kickstarter. I was like, damn, Vijay made another smart economic calculation. That seems really brilliant. But on another level, what I really like about it is it's decentralized. I think it makes the author more like a node, and you connect with your readers more and the buyers more through Kickstarter. Is not just about getting the book or the result, but there's artwork that you can buy on Kickstarter that you're kind of related to the book. And I would love to talk about the artwork because that was another part that was a really pleasant surprise, that I didn't know what artwork Vijay would choose, and I was like, damn, this is dope. So tell us a little bit about that.
Yeah, that's a cool story too. But just to go back one step related to Kickstarter, I really do think this is a great way for authors to release books, and I'm really happy to see Saifedean doing the same thing with his new book. And I really feel like going forward, you're going to see a lot more authors in this space do this, because they're going to recognize that, hey, this is actually a lucrative way of doing it. It's a good way to launch a new campaign and to get the most value out of it. So related to the artwork, it's a funny story. I on Twitter, and I saw some art from an artist, and it was just really cool. I can't remember which drawing it was. He's done a bunch of, they're basically pencil sketches, but they're really detailed and beautiful pencil sketches. And I saw one of his pieces of art, and I said, hey, this is really cool. I love this. I'm writing a book, and I feel like this would be so neat to have this kind of art in my book for each chapter. Would you be willing to help me out? And just instantly, this is one of the great things about the Bitcoin community. Everyone seems willing to help each other out. And I've had so much help from different people. I could name some of the names, like Saifedean has helped me. Nick Bhatia has helped me. They've both written books and gave me a lot of advice. So anyway, this artist said, yeah, I'm happy to do that. And so over the course of several months, there was a lot of back and forth, like, oh, this is one of my chapters. This is what I was thinking about for the art. And he was so responsive. Like, he would come up with something that he thought might, match what I was thinking. And I'd be like, no, that's not really it. And he was so willing to revisit. and go back. And, he's putting a lot of time doing these pencil sketches, these really intricate pencil sketches. And so he's putting all this time in, and he didn't ask me for any money. He just volunteered to do it out of the goodness of his heart. And the funny thing is, he's pseudonymous. I don't even know his name. I still don't know his name. He has an anonymous, not an anonymous, but a pseudonymous handle on Twitter, so it doesn't say what his real name is. And yeah, I don't know that much about him, except through my interactions. It's almost like I'm dealing with Satoshi Nakamoto in a way. It's this guy who's really talented. I don't know where he lives. I don't know what his name is. I don't know how old he is. So yet he's created this beautiful art for my book, which really, I think, sets the book off and makes it more interesting, and highlights the ideas that are in each chapter so perfectly. So I'm really happy with how it turned out. I think the book is it's not just encapsulating the ideas that I think are important, but it's doing it in a way that's beautiful and that I feel really proud to present to people.
Yeah, the artwork is stunning. There's the mighty Bitcoin Kraken. There's the enigmatic Satoshi Nakamoto inventing Bitcoin. That's the one I bought. Then there's the fearsome Bitcoin Minotaur, which I think I'm going to have to add down the line at some point. And the other thing I want to note on is the foreword is from the GigaChat himself, Michael Saylor. So how did that come about? What was that like working with him on this project?
Yeah, I mean, he's become kind of a superstar, and so it's really cool that he was willing to do that. Funny thing is, before I'd even started writing the book, he reached out to me. And he sent me a DM on Twitter, and he was like, "Hey, I really love your article. I've made everyone, the entire board at MicroStrategy read it. All the executives have read it." And I was incredibly flattered. That's a really kind thing to say, that it was influential to you in your journey on learning about Bitcoin. And this was just after he'd bought some gigantic number of Bitcoins, like 50,000 Bitcoins or something like that. For hundreds of millions of dollars. And he said, would you be willing to chat with me? And I said, of course. Yeah, I'm always willing to chat with people about Bitcoin. And so we had a Zoom call, and we chatted for a while and talked about Bitcoin. And I said, if you'd want me to, I'm willing to speak to the people at your company and explain why I think Bitcoin is important. And we had a great chat, and I get the impression that he understands it pretty deeply, which is really cool. As someone coming into the space fairly recently, I think he has understood the value proposition very quickly and very deeply. So anyway, we had that chat, and then several months go by, and then I start thinking about the book and writing the book, and I'm thinking, oh, it'd be nice to have a foreword. Who would be a good person to write a foreword? Someone who's prominent, someone who believes in Bitcoin, someone who owns Bitcoin. And he just came to mind. So I shot him a text message, and I said, "Hey, Michael, would you be interested in writing the foreword to my book?" And he said, "Sure." And that's basically how it happened. It was really cool. And then a week or two later, he shot me back a foreword, and it's just beautifully written. It's like pure Michael Saylor. It sounds like Michael Saylor. It's exactly the way he speaks, but he hammers home the point of why Bitcoin was valuable to his company, why they jumped on board with Bitcoin. And also, very humbling for me, he talked about how the article helped influence him and his company make the decision to buy Bitcoin and add it to their corporate treasury. So I think it's a wonderful foreword, and I'm really proud that he was willing to do that for me.
Yeah, that's awesome. And before, just to be not amiss, I do want to mention that the artist is at Bitcoin Ultras, ULTRAS. That's the Twitter handle. Each chapter of the book is adorned with beautiful original artwork by Bitcoin Ultras. And I do want to jump to valuations. And I want to think a bit about like how have you framed up how to value Bitcoin if you were to put it in sort of large buckets, from this is not valuable and I'm Peter Schiff to maybe I'm Michael Saylor and I value this and I want to hold this for 100 years, and maybe two buckets in between, or whatever you think there might be.
Yeah, so I've been observing the Bitcoin market for essentially a decade now. I got introduced to Bitcoin in 2011. And there are four main valuation frameworks that I have come across while I've been observing this market. And the first one, probably the first one to even come up was, hey, this thing is just a bubble. It's the tulip mania, or it's the dot-com bubble. It doesn't have any fundamental value. There's no real comparative advantages to anything else, any other monetary system, or perhaps it's even a scam. And if you believe in that valuation model, you would assign a long-term price target to Bitcoin of zero. And there are still people who subscribe to that valuation framework, people like Peter Schiff and Nouriel Roubini. Although I don't think it's very widely believed anymore. I think even most skeptics would recognize there's something to this. The second valuation framework is that, okay, there is something to this. There's clearly an innovation that's happened here. Satoshi Nakamoto, when he invented this protocol, has created something new that hadn't existed before. But this is really just internet funny money. It's maybe attractive to a small group of people who might be ideologically aligned to it, like cypherpunks or libertarians, or maybe technologists in Silicon Valley who think it's really cool. So it did create something new, but the value is really limited to a small set of people. So if you were to believe that valuation framework, then you'd think that Bitcoin would have a price somewhere in the ballpark of maybe 10,000 to 100,000. Because it could get as high as 100,000 just with this valuation framework, because there are a lot of very wealthy people in Silicon Valley, and a lot of wealthy libertarians. So certainly enough people who could justify that framework. If it was just money for those people, you could still see that value. The third valuation framework is that this is a new form of money, and it is essentially competing against gold. It has all of the attributes that made gold good as money for many thousands of years, but it actually improves on those attributes. So, for instance, Bitcoin is more scarce than gold. Scarcity is certainly an attribute that's incredibly important to the value of money. And gold is scarce because it's hard to produce. It's very costly to produce more gold. It requires a lot of energy to be expended to dig gold ore out of the ground and to process it and to get the final gold. But gold's supply increases by about 2% a year, whereas Bitcoin has a fixed supply cap. There will never be more than 21 million Bitcoins. So it improves on gold on that attribute of scarcity, but it improves on other ones too. So for instance, it's much easier to transmit Bitcoin than it is to transmit gold. It at very low cost, I can transmit Bitcoin from my house in Seattle to someone on the other side of the world near instantly. Now that's something that's simply impossible with gold, and it's something that has actually never been possible in the history of the world. To be able to transmit value from one person to another person on the other side of the globe without someone standing in between, acting as an intermediary, such as a bank or a nation state. So that's a really big innovation. And of course, if there are other ones too, like it's much easier to validate a Bitcoin as a real Bitcoin. Maybe not easier, I shouldn't say that. It's much less costly. If you wanted to validate a lot of gold coins, it's a very costly thing to do. The amount of time that goes into it, you have to get a spectrometer and expensive equipment, or potentially punch a hole in a gold brick if you have a gold brick, because there are fake gold bars which are gold plated, but on the inside they're tungsten, and tungsten has almost the identical weight to gold. So it's very hard to detect unless you punch a hole in the gold and damage the gold itself. So Bitcoin has these attributes that make it better than gold. So to get back to it, if you believe this valuation framework, you would expect Bitcoin to have a value at least the same as gold, or maybe more than gold. And so that gets you to a price level, a target between maybe 500,000 and $1 million, because 500,000 puts Bitcoin's market capitalization at the same level of gold's market capitalization, which is $10 trillion. So, that's certainly, I believe that's a fairly conservative valuation framework, because to me, it's really obvious that Bitcoin is superior to gold once you start using it. And I used to be a gold bug, so I understand gold really well and understand why gold has value. Bitcoin is clearly superior. So for me, this is a conservative long-term framework. The final framework is that Bitcoin is ultimately going to become the world's reserve currency in the way that the US dollar is the world's reserve currency now, which means that all global trade will be settled in Bitcoin. Financial institutions will settle between each other using Bitcoin, kind of in the way that gold was the reserve currency of the world in the 19th century. And if you believe this valuation framework, then you get to a price level of 10 million plus. I mean, almost unbounded, because you're basically denominating the entire wealth of the world in terms of the 21 million Bitcoin that will ever exist. So you look at the dollar value of the entire wealth in the world, which is hundreds of trillions, and then you divide it by 21 million, and you get a number which is 10 million or more. So those are the four main valuation frameworks. And I think what you're seeing now is that we're transitioning between the second valuation framework, which is, Bitcoin is something which is just attractive to a small group of people, who are ideologically aligned with it, or technologically savvy. It's transitioning from that to the third valuation framework, which is that Bitcoin is superior to gold. And I think more and more people are recognizing that that is the right way to think about Bitcoin. So once it gets to that, once most people hold that valuation framework as like the most sensible one to have for Bitcoin, that really lays the foundation for Bitcoin to move to the fourth valuation framework, which is, okay, this thing seems to be sticking around. It's definitely better than gold. It's a great means of savings. It's a great collateral asset. Maybe we as nation states, a lot of nation states will start thinking, hey, we should keep some Bitcoin in our reserves, or let our people use Bitcoin as legal tender. And amazingly, just in the last few days, there's been a flurry of countries in South America who are talking about that. And El Salvador, the president of El Salvador, has said he's going to try to push through legislation in his country to make Bitcoin legal tender, which is a huge, huge development, and certainly moves us towards thinking about that last valuation framework, that Bitcoin will be the reserve currency of the world.
Yeah. Wow. There's a lot to get in there with El Salvador and nation states. I think I'm going to table that for a second. I'd love to look at, more about Bitcoin cycles over longer time frames. So here I'm thinking more about 4-year cycles, and maybe if we interlace who was excited about Bitcoin during these historic cycles. So if you could kind of give us an idea of what these cycles looked like from maybe 2009 to 2012, and 12 to 2016, and 2016 to 2020, or maybe I'm describing those cycles wrong, but just who was coming into Bitcoin, and what those cycles looked like from a price or valuation standpoint.
Yeah, sure. So the thing I find as someone who's an economist is one of the things I find most fascinating is that we're witnessing the process of monetization, that is Bitcoin becoming a form of money. We're witnessing it in real time. This is happening in the span of years. Bitcoin's only existed for about a decade. The process of monetization for gold took millennia, took thousands of years, from the time the first primitive man picked up a shiny rock on the ground and thought, this is cool, I want to hold some of this, to the 19th century when gold was global money. It took a very, very long time. So we are learning how this process works. So, we can have all this theory about how money works and what we think, but we've never seen this before, and we're learning new things. And one of the things I think is most fascinating is that this process of monetization seems to happen in cycles. And it happens in these hype cycles, Gartner hype cycles. And a Gartner hype cycle is a sort of particular pattern of adoption that you see with a new technology. And the way the shape of this looks is that you start off in the beginning with kind of a flat line where there's a few people who are interested in this new technology and start adopting it and thinking this is interesting or cool or important. And then more and more people get interested and the adoption curve starts creeping slowly up. And then you just get a flood of interest all of a sudden, and interest in the new technology goes parabolic. And the price of whatever new good or service starts going parabolic. And it gets to this climax, and then it crashes, and it crashes down to a level where it reaches a new plateau, which is higher than the previous plateau that it started at. And that lasts a while. And then you get into a new cycle. And this is exactly what's happened with Bitcoin. And the way I describe this is it's a fractal pattern of increasing magnitude. And what I mean by that is if you look at the price level, the price chart of Bitcoin from like the 2013 cycle, and you overlay that on the price chart of the 2017 cycle, it's almost identical. It's almost freaky to look at it, how similar they are. It's just that the 2017 cycle is bigger. The numbers are bigger. They're like 10 or 20x bigger. And this has happened again in our cycle where it's sort of very similar to the 2017 cycle, but it's just bigger. So we've had several of these cycles so far, and you can characterize each cycle by the cohort of people that were participating in the cycle. So the first cycle that Bitcoin went through, the cohort of people who were participating in that cycle and who were buying Bitcoin were the people who really were in a good place to understand why Bitcoin was important in the very earliest days. These were computer scientists and cypherpunks and people who had been thinking about the invention of digital money for a long, long time. It was a very small group of people on the cryptography mailing list. The second cycle saw the influx of people who were ideologically aligned with Bitcoin, people who saw that there was potential to make the world more like the way they wanted it to be. So there was a lot of libertarians, people like Roger Ver and Ross Ulbricht, who came into the market and said, wow, this is a really libertarian technology. I want to get involved. I want to own some of this, and I want to use this. The third cycle saw the influx of a lot of very intrepid early investors, people who are willing to try something new and put money in it before anyone else was willing to risk it, even though this thing was incredibly risky and had a bad reputation in the early days. And I'm thinking like people like Wences Casares and the Winklevoss twins. These are people who were like, well, this does seem, a little crazy, but maybe it could work. So I'm going to put some capital in it. And then the cycle after that, you saw like an influx of early retail investors. So, even like regular mom and pop investors came into the market, but it was the people who were most intrepid in the retail crowd. And now we're in the current cycle. I would say it's characterized by institutional adoption. We're seeing a lot of financial institutions and corporations become interested in getting an allocation to Bitcoin. And so this cycle, I think, is different to the prior one in that the prior one was mostly retail investors. And now the flow of funds is much bigger. You're seeing corporations put in billions of dollars versus individuals putting in maybe tens of thousands or hundreds of thousands of dollars into Bitcoin.
Yeah. One thing I'm really curious about is and when I'm getting at here, not so much in price prediction or where things are going, but like, how does this cycle compare to the 2013 cycle, the 2017 cycle? And the way I'm framing that is, sometimes I look at the volatility of Bitcoin and I think about, wow, we're in the early discovery or the, very exponential growth of monetary phenomena happening in very quick time. And so you have price discovery. And so you have volatility just from natural price discovery and a lack of efficient market hypothesis, or everyone knowing what the value of this project is, versus sometimes I look at Bitcoin as just representing the volatility of the world. And it's the one thing that's stable. 1 Bitcoin equals 1 Bitcoin. And so I wonder how much of this cycle doesn't have to be anything like the 2013 or 2017 cycle. And is it like those cycles? Should we expect or have, roundabout expectations that things will behave in the same way? Or could this cycle be completely different?
It could be completely different. As I said earlier, we are learning, we are students, and we should have humility and not assume that things are going to work out exactly the way that we expect them to work out, even looking at past data points and trying to extrapolate. When this cycle started, and I started writing about, we're in a bull market in mid 2019, I said, this is the beginning of the bull market. And I wrote a long thread on Twitter sort of characterizing what bull markets look like. And later on, I said, I just talked about with you that these cycles are like a fractal pattern of increasing magnitude. And I said, well, let's just take 2017 and apply that shape of 2017 to where we are now and what kind of prices would we see. And it was just a thought exercise. I wasn't saying it was going to be like that. But what I found amazing was that the cycle that we were going through was actually ahead of schedule versus 2017. The price was higher than it should have been if you just extrapolated from 2017. And that was very counterintuitive to me because Bitcoin was already at a bigger scale than it was in 2017. The market capitalization was bigger. So I expected things would move more slowly rather than more rapidly. Now, since we've had this correction recently, we've kind of gotten back to more like the pace of 2017. And some people have actually pointed out that maybe this looks more like the 2013 cycle because I'm not sure if you remember or if you're around, but the 2013 cycle it was almost like two separate bull markets. There was a parabolic rise in price, and then there was a crash. And then there was this, fairly short period where it consolidated. And then there was a second parabolic move, which was quite different to 2017, which was essentially the whole thing was one parabolic move with little with dips along the way. So this could be like 2013 in the sense that we have this mini bear market in the middle of a bull market, and we continue later on in the year after some consolidation. But we don't know. We have no idea how this is going to play out. Everyone has their guesses about how it will play out. I don't like to make price predictions in general because I have humility to say that I don't know. I don't know what's going to happen in the short term, but I am incredibly bullish about Bitcoin in the long term. My time horizon is I want to give these to my kids. I think they're going to be incredibly valuable in the future. And I think I have high conviction that Bitcoin is made to be the world's reserve currency. So I'm thinking about this as something I pass on to my posterity and that they get to enjoy the benefits of it. But in the short term, I'm honest in saying that I don't know exactly what's going to happen in this cycle or the next one.
Yeah. I think it's obvious that, you're long-term bullish based on what we've already talked about in terms of, the 4 ways of valuing Bitcoin. And I think we're on the same page there. I'm more curious about the emotional side. So, one time you did predict that this market would go to about 75K and experience a 30-40% pullback down to around 40K, and there'd be multiple pullbacks. And I don't remember if that was on Twitter or a podcast I heard. I didn't get the notes fully there. But what I'm getting at here, though, is like things seem upside down right now. We have a tremendous amount of good news, tremendous amount of good signal. And I'm not so much concerned about short-term price, but more like, what advice would you give to somebody who's only been in Bitcoin for a year or two, who's got conviction, but doesn't have a lot of experience going through this themselves, actually holding and going through this whipsaw? And what kind of, maybe misconceptions or errors do people make during a bull market or any sort of hype cycle?
Yeah, so I have 2 comments about that. One thing I tweeted a while ago is that your conviction will be tested much more in a bull market than in a bear market because you see these huge, tremendous gains, and the price becomes really volatile, and it's stomach churning, and it's hard to handle it because for some people, Bitcoin becomes a meaningful part of their portfolio, and they make a lot of money on it, and they're thinking, well, should I sell? Should I sell? And then if the price drops, they feel this regret that I should have sold, because they think about the price like, oh, it got to 65,000 if I'd sold then. And they have this, hindsight, which is it's very it's corrosive almost to think in that way, because you're always second guessing yourself. I like to tell people that Bitcoin greatly rewards people who have great patience. So you almost have to sort of buy the Bitcoin, close your eyes, and come back in 4 years. And along that kind of time horizon, I'm really confident that people buying now, or even people who bought at the top, are going to do really, really well. So I think you should recognize that this is a great form of savings, but you have to have, a fairly long timeline. If you're thinking about this as like, I want to make a lot of money over the next 6 months or year, maybe you will, maybe you're a good trader, but I would not guarantee that. And even some of the best traders who have been trading Bitcoin a long time have gotten wrecked, have really destroyed themselves. And there's a lot of wreckage in the rearview mirror of people who thought that they were smarter than this market and tried to trade in and out. And instead of coming out ahead, they left with zero. It's the people who are doing what seems like the simplest and stupidest thing: just buy and hold, keep buying, slowly and surely accumulating. Don't do anything else. Just put it away in cold storage, and then come back in a few years. They're the ones who have done the best, with very few exceptions. So that's what I would say to people coming into this market. And I would also say, you don't have to go crazy on Bitcoin. If you really have conviction in it, buy, however much you want. But you can also just think of Bitcoin as a great addition to a well-diversified portfolio. You can think of it as something that should be there along with stocks and bonds and real estate and so on and so forth. So it totally makes sense to buy 5 or 10% of your portfolio as Bitcoin, and just forget about it and say, it's part of my portfolio. And I'll add to it as I earn more salary, just as I'll add to my stocks, and just forget about it. And there are people who do that and have been incredibly happy doing that. If you're thinking about, I'm 100% Bitcoin and I'm going to day trade it, then good luck to you, because maybe you'll make money, but it'll be incredibly stressful, and there is a very high probability that you're going to get wrecked.
Yeah, I like to sleep at night. I think it was a dollar conversion program. So no matter how little or how many dollars I earn that I can save for the future, I convert them into Bitcoin, because it's just the harder, better money. And I don't think about it in that way in terms of price. But and again, here I want to think about it more in adoption. But the first thing I want to touch on is, Andy Edstrom did make a note on Twitter that this market downturn is unprecedented in Bitcoin history. Never before has Bitcoin price stayed below the 200-day moving average for more than a week in a bull market, which indicates that the bull market has ended. He still remains bullish, even after that sort of notation of that fact. But, I also want to turn to what, Knut von Holm said today, is that, something along that, I'm paraphrasing, is that, in line with what happened in El Salvador and what we saw over the weekend and the bill that they just put to Congress tonight, is, some things happen, gradually then suddenly, like the Berlin Wall. And everyone's expecting, the Cold War to end with some sort of massive confrontation, violence, settled on the battlefield. And the wall crumbled and things happened very quickly. And, in your opinion, is what we're seeing now some sort of, I don't think anyone really expected nation state adoption, during the cycle. And I before I get ahead of myself here, I am concerned that maybe we're in a WikiLeaks type situation here where, maybe this is too early, too soon, in terms of, they have to still pass the bill. Nick Carter says it's close to 100% certain that it will. But what does this indicate to you in terms of, do you think that this is entering some sort of more, nation state cycle that no one expected, or maybe you expected, and will, sort of nations follow in suit very quickly? With MicroStrategy, it's sort of been a little bit of a slower burn. We're 3-4 months out from the Bitcoin for Corporations conference, and only a few companies have adopted. What does this signal to you?
Yeah, I certainly didn't expect major corporate adoption this cycle, or let alone nation state adoption. I would have thought nation state adoption would happen several cycles later. So I would have thought corporate adoption would happen in a big way in the next cycle, not this one. And it could be that, MicroStrategy is just at the vanguard of corporations in the sense that they were willing to do this, and maybe a few others like Square and Tesla were willing to do it this cycle. And it could be that they're an anomaly in this cycle, and that we should expect more of that later on. We got that taste early in the cycle that, a few corporations were doing it. And I think people are like, okay, well, maybe maybe Apple and Google will do it this cycle, but maybe not. Maybe we have to wait another cycle for that to happen. Again, we don't know. We don't know if we're the bull market has ended. We don't know if we're in a bear market now or not. People are speculating on that, based on various charts and other factors. I mean, if you're being perfectly frank about it, one sign of a bear market is that when you have good news, the price doesn't react upwards.
Yep.
So that's kind of what's happening now. You're seeing a lot of great news, fundamentally great news about Bitcoin. The price isn't going upwards. But this, I have seen some vicious bear markets. So this to me isn't anything that I'm worried about. If I was coming into the market now and I'd experienced, a loss of some capital from investing in Bitcoin, I would tell people, I think bear markets are actually the fantastic time to be interested in Bitcoin. If you're one of the people who sticks around during the bear market and can continue to accumulate during the bear market, you are the one who is going to see the biggest gains. And I've seen this in the prior bear markets. I saw the great bull market of 2013 when Bitcoin went all the way up to 1,000 and then it crashed down to about $175. And there were a few of my friends, and that was a really, really tough bear market because almost everyone forgot about Bitcoin. And during the middle of the bear market, there was this huge kind of rage quit from Mike Hearn, who was a very prominent developer, and he wrote an article in the New York Times about how Bitcoin was dead. And that was hard because he was someone who was prominent in the space and people looked up to him, and it was like, well, geez, maybe Bitcoin is dead. But some people stuck around and they were like, no, this isn't going away. And they were slowly accumulating during the bear market. And those people saw just gigantic gains after that. And I think that's going to be true now as well, just as it was after the bull market of 2017 and then the crash in 2018 and 2019. The people who stuck around were the ones who benefited the most. And it's hard. It's really hard in a bear market to stick around because the interest goes away. The press stops writing about it. It seems like nothing's happening. And it's not as exciting to invest in Bitcoin. It doesn't seem to go anywhere. You buy it and it just kind of sticks around. It's flat and sometimes it drops. But for the people with conviction, they love bear markets. They're the best time to get your financial energy into Bitcoin, through the salary that you earn or whatever savings that you have that you want to invest. So I don't know if, we could be in a bear market, or it could just be like 2013 when we have this mini bear market in the middle of a bull market. We will see. I'm really excited to see how the rest of the year plays out and whether or not we get back into bull market mode, or whether we just flatline for a while and we have to wait till the next halving cycle before we get back into a new bull market.
Yeah, I'm excited. I'm excited for how excited you are. But it's interesting you brought up Mike Hearn. Mike Hearn, I wasn't around then, but from what I've gathered and my inclination is it seemed like some sort of attack and not, from a true Bitcoiner. Maybe. And, recently Donald Trump came out and, said, Bitcoin is a scam, but it competes with the US dollar. And I think if you're good at news speak or double talk, you could see that those things are kind of a paradox or opposed to each other. And how could it be a scam if it's actually going to compete with the world's reserve currency? And what I'm really getting at here, though, is where do you think we are with mental capture? And sort of how pervasive is the idea of Bitcoin, in the sense, and not so much. Didn't mean to bring up politics at all. So just how many people do you think are aware of Bitcoin right now in developed countries, let's say, in North America, and what percentage of people are not reached by Bitcoin, or is it just people are already been touched and they're ignoring it, or they hate it because whatever, or they're just involved already?
So I wrote about a topic related to this on Twitter, I think a couple of years ago, called Touchpoints, which is the number of times a person needs to hear about Bitcoin or have it recommended to them before they decide that it's worth thinking about or decide it's worth putting a little bit of their savings into. And that's different for every person. And one of the touch points might be someone gives you a little bit of Bitcoin. I gave, small amounts of Bitcoin to various friends and family over the years. And as the price appreciated, it became a significant amount for those people that they were interested enough to go and look into Bitcoin themselves. And a lot of them put some more savings into it and have done really well. So the number of touch points is kind of a measure of like how long it takes various people to get into Bitcoin. And when you have a touch point, it's kind of priming you to be ready to get interested in Bitcoin. So the amount of priming that's required for different people can vary a lot. If you're someone who's thought about cryptocurrency or digital money beforehand, if you're one of the people who had been part of all of the attempts, like Hal Finney was, to create digital money, when you hear something like Bitcoin, the first time you're like, wow, this is important. Hal Finney knew immediately. He only needed one touch point before he was like, this is legit. I'm going to look into this. And he did. He really looked into it, and he was the recipient of the first transaction. For me, as a libertarian, it took 2 or 3 touch points, and those came from people I really trusted, people who said, hey, this is really interesting and cool, you should check it out. Someone like my parents, it might take 20 or 30 touch points. Maybe all of the people around them, all of their friends will say, hey, we own some Bitcoin, do you own any? And before they're like, well, maybe I should do that. Like for example, my dad didn't get onto Facebook until like 2017 or something like that. He was like one of the last people on earth. So in the Western countries, I would say I'd say the vast majority of people have heard about Bitcoin. They've had a few touch points already where people have told them a little bit about Bitcoin, but maybe they haven't had a really good exposure. They haven't had someone sit down and talk to them and explain why it's valuable. They might have heard it on the news, or they might have heard like, oh, this is used by criminals to buy drugs. So for those people, it might take a couple of people sitting down and talking to them about why it's valuable before they get interested. And it could be some people, because they ideologically disagree with Bitcoin, they might be the last in line, because no matter how many people tell them about why it's interesting or useful or valuable, they just fundamentally don't believe in it, almost for religious reasons. Like you look at Paul Krugman, who just is almost despises free markets, or Peter Schiff, who's very skeptical of Bitcoin because he's a gold bug. Those people are going to be the last in line in buying any Bitcoin, because they have an ideology which is part of their identity, and it's very hard to reject your own identity. People find it very hard to do that. So people like that, no matter how many touch points they have, they're probably not going to get on the Bitcoin bandwagon until they're forced to, because they have to go to their grocery store and use Bitcoin to buy bread or milk or something like that.
Yeah, it's very interesting. You mentioned identity, and I want to take a look at the ESG risk here, where we're looking for clean Bitcoin blocks and things, and clean Bitcoin mining, and Bitcoin's energy use is going to boil the oceans. And how much of a risk do you think this is? Actually on the ground. Not so much a narrative, in terms of retail adoption, but in terms of maybe state level banning of proof of work mining?
Yeah, I think it's a narrative that will be used by Bitcoin's enemies as a way to convince nation states that they should attack Bitcoin or shut it down, attack it in various ways, like ban mining or restrict mining, or potentially even say, like, we're not going to allow you to own Bitcoin. When I think of whether that will happen or not, I think about whether Bitcoin gets enough political capture that's possible. And what I mean by that is that enough people own Bitcoin that it becomes politically infeasible for a government to attack Bitcoin, because it's just very politically unpopular to do something like that. And the example I like to give about this is the company Uber, the ride-sharing company. They had this habit of going into markets around the world, going into cities and starting their business without any permission. and and local city governments are not very good at keeping up with innovative technologies like Uber, so they don't really even know how to regulate them. But whenever Uber would go into a city, the taxi lobby would be really upset and say, well, this is competing with us. This is unfair. They're obviously Uber is much better than most taxi services. So they go to the local city government and say, you need to shut this down. And you can think of this as a microcosm of what might happen with Bitcoin, except in a different market. But it was impossible for these local city governments to shut Uber down, because it had already by that time won enough users who were passionate about using Uber and enough drivers who made their money from Uber driving people around, that was a very strong constituency who said, no, do not shut this down. If you do shut it down, we will lobby to get you voted out, and we will personally try and vote you out. And so politicians really only care about their own power. And so they're very sensitive to these kind of things. And I think the same thing is true with Bitcoin. If there are enough people who own Bitcoin in the democratic nations, the Western nations like the United States, then it's very hard for politicians to go after it. And we're already seeing that there are people in Congress who are pro-Bitcoin because either their constituency is pro-Bitcoin or they just personally own it and they've seen the value in it. And we have now a United States senator, for the first time, a United States senator who's very pro-Bitcoin and who owns Bitcoin herself, and now has said that she is going to make it a point to educate her fellow senators about the value of Bitcoin and how they need to take a light regulatory touch with Bitcoin. So I think I'm very optimistic that Bitcoin will get to the point in the next, say, 4 years where shutting it down will be as infeasible as trying to shut down a 401k program, the 401k program. Because if you imagine trying to shut down 401k in America, you'd have a revolution, because that's people's retirement. They're not going to allow that to get shut down. If enough people own Bitcoin, the same thing will be true. They'll say, you cannot shut this down. This is our savings, and it's not allowable for you to do this. So I'm optimistic we'll get there, but I also think this is an open question. We can't be too sure of ourselves. We need to recognize this as a legitimate risk, that nation states may come after Bitcoin and may eventually recognize that this is an existential threat to their control over monetary policy.
Yeah, agreed. And, along those lines, I was going to ask you about cyber attacks, ransomware, and SHA-256 FUD, but I think you kind of addressed it there. So I'm kind of curious, what your thoughts are on sort of like the altcoin, season or wave within the Bitcoin waves. And again, not from an investment advice for price prediction, perspective, but like, I was willfully ignorant, where I just was like, we learned our lessons. No one's ever going to get involved in altcoins again. And I struggle with, having patience for people who get involved in altcoins because they're closer to Bitcoin than someone who just still has their money at, their bank, or, whatever their way they're storing their value. And sort of like, I get frustrated because, it's hard to express the value of Bitcoin when these other things might be accelerating at a faster pace over short periods of time, not longer cycles. So how do you frame that up for people that are newer to the space and trying to, reconcile that some of these things are moving quicker than Bitcoin, but they're not Bitcoin, and how this fits into, what we're seeing here with the creation of a new monetary phenomenon. We're all learning.
Yeah, and I would confess and say that I think that I'm learning something here too. I would have agreed with you in 2017 and said that, we may not have another one of these altcoin crazes, the alt season, because people have learned their lesson. And I think maybe, looking back on it, maybe it's better to say that this is just part of the speculative mania. When you get through this process of monetization, when you get to the parabolic phase of the Gartner hype cycle, that's when it's just pure speculation. People are just piling into the market because they want to make money quickly. They're not strong believers. So one small exception I'd make with what you said is that you said people who are buying these altcoins are closer to being able to get on board with Bitcoin than people who haven't got any Bitcoin. I don't necessarily think that's true, because the people who are speculating in altcoins are just part of this mania. They're just like looking for quick profits. They're trying to do a 10x in like 5 days, those kind of crazy things. Whereas the person who doesn't own Bitcoin might be someone who's just like trying to have a well-diversified portfolio, or is trying to invest conservatively. And while they may not have gone through the hoops of trying to figure out how to buy Bitcoin or how to buy cryptocurrencies, they may have a better mindset than the people who are buying into the alt season. So I guess my point of view now is that when you get into the speculative mania part of a Gartner hype cycle, maybe it does make sense to have all these altcoins come out, because people aren't very discerning when it's the mania phase. They just want to make money quickly. And that's serviced by people who come in and say, well, I've got this great vehicle to make money. There are so many hucksters out there and, snake oil salesmen who are always going to come up with the latest, newest scam to service people who think that they can make money very quickly. So maybe we just need to accept that every cycle we see, we're going to have these altcoins, because they're very easy to create, and you can just put a narrative around why they're great, and why they're going to be the next Bitcoin, and why you're going to make 1,000x on your investment in the next year. So it's very easy to create them, and in the speculative mania phase, there's going to be some fraction of people who are just going to say, I want to buy anything that will make me money. And the thing about these altcoins is they're so small and so liquid for the most part, that even a small amount of capital moving into them can cause the price to go up manyfold, especially when you have someone like Elon Musk say that he likes Dogecoin. You have, fairly large amount of capital coming into it. It's like a very small pond, and you drop a massive amount of water into it, it's going to have a big effect, right?
Yeah.
It's the same thing with a lot of these altcoins. And that then spurs the mania even more, because they're so small and so liquid. The price can move up very, very quickly, and that attracts more gamblers into the space. And so it feeds on itself and becomes this frenzy. So my view now is that maybe I just need to accept that these manias are going to happen, and these alt seasons are going to happen. And the fact that people got burnt last time doesn't mean anything, because in this new cycle, it's new people coming in, and they never had the opportunity to learn why this is a bad idea. And they're gonna have to go through the pain themselves before they recognize most of these things as scams.
Yeah, I agree there. And I'm kind of curious then what you think about AMC and GameStop and the meme stocks. Is it a similar vibe, or are these a different animal?
Yeah, I think it's similar in the sense that they're very small and liquid. And if you have enough people come together and say, let's just pump this up, it's possible, because when you put in even a relatively small amount of money into something that was small and liquid, you can move the price a lot. And I think it's part of a larger phenomenon that people are just rejecting the Wall Street establishment in a way. They've just gotten so sick of how Wall Street is protected by the regulators, and whenever they do something bad, they're rescued, but the regular retail guy gets it in the shorts every time. So I think GameStop is a reaction in that sense, because a lot of retail investors got together and said, wow, there are the hedge funds which are really short this stock, and we can destroy those hedge funds by buying up the stock and forcing a short squeeze and blowing those hedge funds up. And that's really what happened. It was almost a game that this group Wall Street Bets came up with to destroy the Wall Street establishment.
Yeah, it's very interesting. Kind of comparing, maybe, using our Austrian economics hat, how do you compare what you see going on with inflation right now, QE, money printing, and what are your expectations around inflation versus maybe credit deflation?
So I wrote about in 2010 that I thought we were going to see a period of deflation, despite the fact that the Federal Reserve had created a massive amount of reserves, like trillions of dollars of reserves. That was actually very controversial back then. There were a lot of Austrians who said, no, there's going to be hyperinflation, because when you create all these reserves, the banks are going to lend them out. And you have all this money flooding the economy, and you'll have hyperinflation. But what happened was the banks couldn't lend it out because they were so capital constrained. They had so many losses on their balance sheet from all these bad loans during the housing crisis. And the regulations became much more strict on lending. It became very difficult for banks to lend. So all those reserves that the Federal Reserve created basically sat idle and didn't do anything. It was almost as if they created trillions of dollars and buried them under the ground, so they didn't have have an inflationary effect. So quantitative easing isn't inflationary in and of itself, whereas what's happened in 2020 is actually much, much more inflationary. It's kind of the equivalent of a helicopter drop of money. It's direct stimulus checks into the economy. And Ben Bernanke gave this metaphor of how you could fight deflation. And he said, well, as central bankers, we should never be afraid of deflation, because we can just get in our helicopters and drop money from the sky. And that will cause prices to go up, because people have money in their hands and they'll just go spend it. So this is different to lending money to the banks, who then don't lend it out themselves. It's just giving money to consumers who spend it. So what happened in 2020, I think, was a much more inflationary policy by the US government and other governments around the world. So I do expect we're going to start seeing the effects of this in prices on consumer goods, where you go to the grocery store and you should expect that the price of bread and milk and things like that is going to rise. And that's actually what has been happening. So whether or not that gets out of control, that's an open question. But I think we should expect to see fairly significant inflation over the next few years, definitely higher than the Federal Reserve target of 2%.
Yeah, interesting. I'm kind of curious, how old do you think Bitcoin is in Bitcoin years? So, I think each Bitcoin year is like maybe 4 years. And the way I'll kind of frame that up is, the internet after 12 years was still maybe embryonic, but maybe Bitcoin, I'm not sure if it's embryonic after 12 years, or is it further along because it's exponential technology built on top of exponential technology. How far along and robust is the system? How grown up is it?
When I look at Bitcoin and I compare it to the internet, I kind of feel like we're in the early 2000s. And I talk about this sometimes in terms of the Lindy Effect. And the Lindy Effect is this concept that the longer something exists, the greater the confidence that it will continue to exist long into the future. And the reason I talked about that was, I said one of the advantages gold has as a monetary good over Bitcoin is it has this very long established history. It's been used as money for thousands of years. But that's actually not a huge advantage, because people's confidence that Bitcoin will exist for a long time will grow very rapidly and asymptotically approach the confidence people have that gold will be valuable into the future. So to give a more concrete example, in the early 2000s, the internet had existed, say, about 10 years, and people were like, oh, this is interesting. It seems like it's important, but we have really no idea how big it is or how important it is. You got to remember, this was before This is before YouTube, before Facebook, before smartphones, before people weren't really doing anything important with the internet. Then fast forward to 2010, 10 years later, when the internet had existed about 20 years, and it was completely obvious how important the internet was going to be. It was transforming industries across the entire world. And this is when we had smartphones. We knew about Facebook, we knew about YouTube, Google, Google Maps. We knew all of the transformative ways that the internet was changing the world. And I think by 2010, people recognized the internet was going to be a permanent institution in the world and a very important one. So I don't think it was necessarily as obvious in the early 2000s. So even Paul Krugman said the internet wouldn't be more important than the fax machine in the early 2000s. He turned out to be completely wrong about that. So I think Bitcoin is at that stage where people are like, this seems important, but I'm not really sure how it's going to be important or why. I think if you fast forward a decade from now, I think it'll be just as obvious as it was in 2010 that the internet was really important. And I think it takes about 20 years for a technology to develop before people recognize its significance in the world. So I think the next 10 years are going to be very, very exciting as it becomes clearer and clearer that Bitcoin is going to be transformative to the world's financial system.
Yeah, that's very interesting. When you start to really maybe think deeply or meditate on Bitcoin, what are maybe some of the areas that really, excite you, or, whether it's philosophical or technological, or whether it's around privacy or security? What really kind of like in your free time are you noodling on?
Let's see. I mean, just philosophically, the thing that I'm most excited about, as someone who's a philosophically libertarian, lean libertarian, is that I think it becomes much harder for nation states to fund warfare when they can't inflate their own money supplies. Because the typical way that a government will pay for its expenditures is using inflation. Taxation is actually very unpopular. So governments try to expand the amount of capital that they can use for their programs using inflation. And when they don't have the ability to inflate the money supply, if all the world's savings are in Bitcoin, the only way they're going to be able to fund their programs or their policies is to directly tax people, to go into their pockets and say, we want this money and we're going to do it for the purpose X, Y, and Z. And I actually think that's a much more honest way of funding governments, that governments go into people's pockets and have to justify to their populations why they're doing something, rather than the insidious means of funding through inflation. The other thing, that's the sort of philosophical thing. The other thing I have been thinking about more and more, and something that surprised me that I guess I didn't anticipate when I was thinking about Bitcoin in 2013 or 2014, is Bitcoin's use as a collateral asset. I did not anticipate this at all, that Bitcoin would become this incredibly useful collateral asset where financial institutions can accept it and then provide products on top of Bitcoin when you post Bitcoin as collateral. And in hindsight, it makes complete sense, because Bitcoin is a bearer asset. When you have it, you have something that is valuable in and of itself. It's easy to transmit. It's easy to verify and validate that you have legitimate Bitcoin. So this is a great way for financial institutions to provide products like leverage or derivatives or shorting, things like that, where you can, an example of this is something like Genesis or BlockFi, where you can post some Bitcoin there and then you can get interest on your Bitcoin, and BlockFi is lending that Bitcoin to other people who use it to, short the market or go long the market. And you could also imagine companies which allow you to bet on derivatives. So you post some Bitcoin, so you post, 0.5 Bitcoin, and then the company provides derivative products that allow you to bet on the US stock market. So you could be someone in Bangladesh who doesn't have access to the US stock market, but you have Bitcoin and you post it as collateral, and now you can make bets on the US stock market. Now that is something that I think is very, very important that I hadn't understood a few years ago. And to me, that is the path in which Bitcoin becomes the foundation for a new financial system. It's more and more financial institutions recognizing that this is a perfect collateral asset. We need to start accepting it, and we need to start allowing our customers to use products that are built on top of Bitcoin as collateral.
Yeah, that's interesting. And I'm kind of curious how you think about scarcity. And is there anything else in the world that is relatively scarce from, a human perspective, considering how far technology has come along? Whereas, in maybe in a Bitcoin standard world, is gold lose all its monetary value or premium? Is there anything else in the world that is scarce?
Yeah, I think there are other things that are scarce, and there's sort of status scarcity that comes from artwork, for instance. So the Mona Lisa is definitely scarce, but the Mona Lisa will never be as valuable as the world's money supply, because the Mona Lisa is singular. There's only one of them, and it's not divisible. You can't sort of trade pieces of the Mona Lisa. So the money supply ultimately is going to capture the value of the entire world, but you will have these pockets of scarcity where you'll have, say, for instance, really desirable real estate, which has a lot of status value. So having, a very expensive house on the beach will still be very valuable. So I think there's a status premium in various goods, but there is also a monetary premium in various goods that I think will be drained away. So you give the example of gold. I think the monetary premium of gold will be drained out and go into Bitcoin. And another example is real estate in places like Vancouver, Canada, where a lot of people in China have moved a lot of their savings over to Vancouver, Canada. And they're just buying these houses and keeping them empty because they want an escape hatch in case the Chinese government becomes oppressive. So they have real estate which isn't doing anything. But real estate isn't a really good vehicle for savings because it's hard to transmit, it's not divisible, it's illiquid, it has all sorts of problems. So I think the monetary premium in things like that will drain out and go into Bitcoin as well.
Yeah, I agree. And I'd love to just round out, coming out of just basking in the glory of the weekend and the conference, what your thoughts were. I think you got to meet Dr. Ron Paul again. He kicked off the conference. There were a lot of great speakers. What really touched you? What moments really, spoke to you, and what were your takeaways?
It was an incredible event. The first Bitcoin conference I went to, actually the last one, because I skipped a lot of them intervening. There's a funny video of Andreas Antonopoulos, who's one of the most eloquent educators about Bitcoin. There's a video of him in front of a room of just chairs, and there's no one sitting in the room. He's at this conference, there's no one listening to him. It's like 2013. And to go from that to where we are today, just 7 years later, and to see 12,000 people converge on this conference and stand outside in the sweltering sun in Miami to get into the conference because they were so excited to be there. It's just so exciting to see the adoption of Bitcoin in the flesh, so to speak, to see all these people who own Bitcoin and who are excited about Bitcoin. On a personal note, yeah, you mentioned that I was hosting a panel early in the first day of the conference, and Ron Paul was speaking just before me. And so it was so cool to hang out with him backstage because he's a huge hero of mine. And in 2007, I quit my very lucrative job at Google to go campaign for him in the presidential election. He's a personal hero of mine. So just to get to hang out backstage, he's getting quite on in years now, and he's still incredibly sharp. He's got a very sharp mind, but you can see he's slowing down a little bit. But to stand there with him, it's almost like standing there with your own grandfather. And it's just so much love there. And we got to talk, and he was joking about how he was worried about me quitting my job at Google and how he didn't know if that was a good idea or not. And I said, it was great for me. It led me on all these different paths that were really valuable to my life. And so I said thank you to him again, and I got to give him a copy of my book as well. So that was a fantastic experience for me, and I got to meet a bunch of people who I have so much respect for in the Bitcoin community. People who are authors who put out a lot of great content. People like Lynn Alden, Nick Carter, Saifedean, all that. And I got to hang out with a bunch of podcasters like you as well. And it was just the happiest experience of my life. Is like hanging out with family for a weekend, a really fun weekend. So I'm super excited about Bitcoin after that conference. I've never felt more bullish. The news about Bitcoin has never been more bullish, regardless of what the price action is. I am so bullish on Bitcoin for the future.
Yeah, it's very interesting. You left your job at Google to go and campaign and help Dr. Ron Paul. And I'm not as familiar with Dr. Ron Paul, but from what I gather, he's very he'll let the free market decide. That's what he's all about. And so I'm not sure how big he is with Bitcoin. And I also noticed, no one was going to stop him from speaking, and he just kept going without unprepared notes, and it was great. So I'm kind of curious, though, do you think Bitcoin could lead to a political renaissance where maybe people like you and me who might have been politically minded before Bitcoin and via Bitcoin became less politically minded, or for whatever reason or whatever experience, but there might be more engagement in the future because maybe things are brought closer to the person, and maybe the framework of politics gets more based on fact in a hard money Bitcoin standard, and we get maybe more leaders that have skin in the game, or whatever we're looking for to incentivize people to lead us in a better way? Or is it Bitcoin standard leads to just less politics? Because I think right now a lot of people are turned off in the Bitcoin community, and could there be a return to sort of a better political period, like maybe in the Revolutionary American times?
Yeah, I sort of view a world under a Bitcoin standard as a less political world, and I think that would be very healthy. I think the level to which politics has infiltrated every aspect of society is a sure sign of the decline of society. I think most people should care about things far more important than politics. They should care about their family. They should care about their careers. They should care about benefiting their local communities. I think those concerns are far more important than like what's happening in the federal government. And I think another great thing about the world under a Bitcoin standard is that there would be far less sort of speculation and gambling. But one of the great damages that's done to society is under our current economic system is that inflation encourages people to gamble and across all professions, because people, when they get their salary, they then have US dollars, and people are genuinely worried for good reason that those dollars are losing value and that they need to put those dollars to work, so to speak. And what that ultimately leads to is people day trading and gambling on stocks and putting all this intellectual energy and time into trying to figure out the best investments, when that's really not very good for society. What you want is for people in their professions, whether they're carpenters or doctors or computer scientists, to really focus on bettering themselves at their craft and to become the best doctor or the best computer scientist or the best carpenter they could be, rather than thinking about whether they should be day trading GameStop on Robinhood. So I think under a Bitcoin standard, people wouldn't need to worry about, taking their money and having to invest it because it's losing value. Their money would gain value slowly over time. If they wanted to invest, sure, they could do that, but they wouldn't have that pressure or fear that they would be losing value on their money. So I think we would have a renaissance in the sense that we'd have an intensification of the division of labor. And the division of labor is the most important thing that provides for the advent of civilization, which is that people focus on a particular thing that they're really good at, and that benefits all of us because we each learn a craft or a profession and become really good at that. And then we start trading with each other, and we benefit from the fruits of other people's labor in that way. So I see an economic renaissance, and I see also a diminution in the amount of politics in society, which I think would be a very healthy thing. People stop talking about politics and start talking about their local communities, their families, and what's important in their own personal lives.
Yeah, wild. I'm kind of curious in this economic renaissance, how do you see big tech and the place in our lives of these companies like Google, Amazon, Facebook? Do they get bigger and stronger? Do they become bigger than corporations? They are corporations. Do they get bigger than countries and nation states? Do they amass more power and exert more power? Or, do they get fractionalized like nation states and sort of this depoliticalization that we've been kind of referring to?
I think one thing am worried about, and I do think is a big concern right now, is that these companies have, amassed a huge amount of power, and they are more powerful than nation states in a way. And I think they've become the dominant communication channel for the world. And this is a very, very troubling thing, because what they're creating is a monoculture, a global communications monoculture. Basically, the values that are held by the people who work at these companies are being spread across the globe. And not everyone has those same, very left-wing values that are held by people at Google and Twitter and Facebook. So it's very troubling. I don't know what the solution is. As a libertarian, I don't like the idea of governments going in and regulating these companies, but I am hopeful that we'll find decentralized solutions so that people can get some of the functionality that they get from these companies without the power being centralized in these companies. Because I do think they've become too powerful, and I do think they're having a negative influence on the world, in that they're creating a single culture on the internet, and that's a bad thing. We need to have a flourishing of different ideas and people being able to find a set of values that are right for them and for their community, and not necessarily the values that come from Silicon Valley.
Yeah, it's going to be wild. It's going to be interesting. I can't tell you how much I've enjoyed this conversation. I have one final question for you. I enjoyed the conference immensely. Some of the highlights was definitely Jack Mallers, getting to see Julian Assange's half brother Gabriel and his father speak. The recorded conversation with Ross really, kind of broke my heart and just blew me away. Dr. Ron Paul, the mayor of Miami, Matt Odell. There was just so many good talks. So I'm just kind of curious, what did you think of Floyd Mayweather?
I didn't even see him there, to be honest. I heard reports that he was there, and I had very low expectations. I expected he was going to say something about some altcoin that he created to make money for himself. A much bigger height. You mentioned Matt Odell. The thing which sticks out in my mind much more than Floyd Mayweather is I got a hug from Matt Odell, which was very meaningful for me. I'm a huge fan of Matt Odell. So yeah,
he's tough to get my head around. Just in terms of he's an enigmatic character who has so many good things to say. And it's his words carry so much resonance, and it's just so hard to find out who he is, and it's very interesting. But he's one of the most, I think, poignant voices in the space, and brings a lot of levity. One of the things that I really liked about what he had to say was the conversation that he was on the panel was just about Bitcoin across borders and sort of about nation state attacks and the point they were making is we're not necessarily ready for hyper Bitcoinization, because right now, if we were to zoom there, most people would be caught in a KYC custodial net, and their experience, their know-how, and their process and procedures wouldn't really advance much or innovate from there. And we need to do so much more work before we're ready to onboard everybody in a truly Bitcoin way. And it was great. None of the conference was really rah price, but it was still great to hear some people's kind of dial it back a bit about where we are in our progress and be realistic. And that if we go too fast, too soon, and just focus on price and sort of adoption in that sense, that we're not going to achieve everything we're hoping to.
Yeah, Matt is a really great voice and advocate for privacy and why it's important for
Yeah.
Bitcoin, and why we should continue to the technology should continue to improve and people should consider the importance of privacy. I think he's a really great voice for that. And I think you're right. We don't want to be a victim of our own success. We don't necessarily need this to all happen next year. This is in my mind, it's a multi-decade process. I view Bitcoin as something that's going to be very valuable to the society for my grandchildren. So I'm in no rush. I think this is a very big deal, but it's going to be a big deal a decade from now. I'm very, very confident of that.
Yeah. And on the Floyd tip, at first I was kind of like, oh man, why do we have to deal with this? And then after a while, I just thought it was funny and entertaining and just another part of the hoopla, and sort of, the mental capture and mind share of Bitcoin. And everyone's going to have to learn or bend the knee eventually. So I can't tell you how much I've enjoyed this conversation. I'll leave it to you for any parting words, and definitely let people know where they could find you on Twitter and whatnot, but also how they can get your book.
Yeah, so you can find me. I'm on Twitter. My handle is real_Vijay. That's REAL_VIJAY. You can find my book on Kickstarter for the next about 5 days. I'm not sure when your podcast will go out. And after the Kickstarter is completed, I'm going to start shipping the books out, signing a lot of books. It's going to take a long time. I'm going to have to sign maybe 1,000 or 2,000 books. And after that, once I've made sure those early backers of my campaign who were generous enough to support my campaign have got their books, I'll get it on Amazon, and I'll start working on translations and an audio book and a lot of that other stuff. So you'll hopefully be seeing these things in stores over the next coming months.
Yeah, I hope you do 2 versions of the audio book. I think you should read it. And I think if you want to get somebody else to read it as well, that would be awesome. Maybe Guy Swan. And are you going to BitBlock Boom?
I would love to. I would love to go to BitBlock Boom. I went in, I think it was 2019, and it was incredible. It's
With Bitstein spoke?
Yeah, exactly.
Man.
That's the one. Yeah, it's a smaller crowd, but it was just great.
Yeah, that was wild. Well, I hope to see you there. This has been so enjoyable, Vijay. As always, I hope to speak to you again soon. Thank you so much.
Thank you, Cedric. It was fun.
Yeah. Vijay Boyapati on the valuation frameworks for Bitcoin, nation-state adoption, and the speculative mania of its hype cycles right here on the Bitcoin Matrix podcast. And thank you for listening. If you dug the show, make sure to subscribe and give a dope review wherever you dome your pods. I have so many incredible guests lined up that you won't want to miss. Keep learning, keep stacking, and stay humble. This is Cedric. Peace.